Hi, I'm Steve LaFrance with Blakely Financial, and here's a brief summary of how the markets fared in the third quarter of 2021. After a great start to the quarter, markets pulled back significantly in September, but remained up for the year. The Dow declined 4.2% for the month and 1.5% for the quarter. The S&P was down 4.6% for the month, but gained 0.6% for the quarter. Finally, the Nasdaq was down 5.3% for the month and 0.2% for the quarter. Abroad, international markets were similarly hit, with both developed and emerging markets down for both the month and the quarter. The September declines were primarily driven by a reversal of both the medical and economic improvements seen in July and August. The Delta wave brought medical risk back to the forefront, generating a slowdown in hiring and consumer spending, which started to hit mid-quarter and rose sharply through mid-September, raising the possibility that rising medical risk would hurt economic growth and potentially lead to shutdowns again. Supporting that possibility was the increase in the positive test rate and sharp increase in hospitalizations and deaths. On top of that, the Fed recently indicated it will start tightening policy, leading to a rise in interest rates. This was a perfect storm of market concerns all in 1 month, and it generated a sharp reaction. We saw a sharp decline in hiring, from more than 1 million in July to less than 250,000 in August. Layoffs started to rise again after declining earlier in the quarter and ended the month where they started. Expirations around supplemental unemployment insurance, the eviction moratorium, the foreclosure moratorium raised worker worries and drove consumer confidence down, with the Michigan survey dropping to the lowest level since 2011. Weaker confidence is already showing up in weaker spending, and this could well slow things down going forward. In spite of this, there are still reasons to believe the fourth quarter will be better. The medical news is already starting to improve. New case growth with a 7-day average basis was down by 1/3 during the month of September. The positive test rate was down by a similar amount, and hospitalizations were down by almost as much. The improvement has been sharp, and it may well continue. The economic damage also stopped getting worse. Layoffs rose but stayed at July levels, and consumer confidence appears to have stabilized. Strong business confidence and investment should provide a tailwind, and even the consumer economy still has substantial momentum. Many of the most significant factors are starting to recede, and as we move further into the fourth quarter, we will likely see more improvement as consumers respond to better medical news by going out and spending more. And that is what markets appear to be expecting. The market's economic foundation is still reasonably solid. What appears to have been shaken is confidence, which will improve with the data. Earnings are expected to continue to come in strong, with margins up and sales holding. Corporate earnings are expected to rise by more than 30% in the third and fourth quarters. Companies continue to sell more and keep more of the sales as profits. From a business perspective, confidence remains high, and the results are justifying it. A recovery in the medical news and consumer confidence should help keep those positive trends on track. Here's another potential positive factor. Although the markets have been shaken by both an economic slowdown and the prospect of higher interest rates, those risks offset each other. If the economy does remain weak, that will likely keep interest rates low, which will support the market. The overall outlook remains positive. The risks we saw in September are real, but there are signs that those risks may be fading, and that the real positive trends from July and August will reassert themselves. September was the month when the market started to take the risk seriously. October will be the month when we find out if that continues or if the improving trends turn it back around. I'd like to thank Brad McMillan, our Chief Financial Officer, for this research and assistance with these market reviews, and as always, thank you for your trust and confidence.